All right, guys. What is going on, man? I'm so excited to be here. How are you guys doing? I want to see some sevens in the chat box. Let's get some energy going for day 2 of the Driven and IX Funded Trader Bootcamp. Post some sevens in the chat box, some dollar signs in the chat box as people continue to pour in here. Also, don't forget to like, share, subscribe, and of course, send this link to anybody that you like, trust, and care about that wants to see the information. Now, I have the honor to start off the first portion of day 2. It's going to be very, very, very informative, and there's going to be something special for you guys towards the end of my segment, and I've never been more excited in my life to present to you guys. So what's going on, ladies and gentlemen? My name is Jay Adams. I'm a teacher here with Driventrading and IX Global. I have taught around the world now for 8 years. I'm in my 8th year, almost a decade of teaching people the skill set of trading. And now we're going to teach them some skill sets to provide them potentially, maybe no guarantees, again, with some funding. Again, guys, post this link, share it out there and stuff. I'm going to have the honor to bring you guys this first portion of day 2 of the Driven Traded Funder Bootcamp. So I'm going to bring up my slides here real quick. We're going to get into it, right? So quick disclaimer, of course. Anything I discuss today is considered financial, is not to be considered financial advice, and is for educational purposes only. Okay, we're not making any guarantees, claims, anything of that sort. So just get that out of the way. Need to make a disclaimer. But I have the topic today of rules of a good funded program. You know, there's so much out there in regards to funding and, you know, this one and that one and what rules are good, what should I be looking out for? And, you know, you may or may not know some individuals who have gotten funded and maybe, you know, they don't get their payout like they were promised, or you kind of hear all of this, negative, positive, all these things, right? So I'm here to decipher what actually makes a good funded program, okay? So let's dive into it. What makes a good funded program? Well, we need to start with the premise of what a funding program is. Because I think, you know, as popular as it may seem to me or, you know, the other traders in the platform, or maybe yourself on the call who is familiar with trading, there are people out there who have no idea what funding programs are or don't even know that they exist. And funding programs allow traders the opportunity to trade the firm's capital that is presenting that type of funding program. Well, that first sentence right there, how amazing is that, right? That a firm is willing to give their capital for you to trade. See, when I first started out on my journey, ladies and gentlemen, back in 2015, there wasn't anything like this out there at all. It was nitty gritty, in the trenches, all for yourself. You had to figure it out on your own. And if you didn't have the money, well, guess what? You had to work your butt off, work an extra job to get you some, extra capital to fund that traded account with your own money. And then you had to be disciplined enough, maybe over leverage a few times. We've all been there, done that, haha. But, to get to a point where you could, grow your account slowly over time. Here's the issue with that I don't really have an issue with it, but it is an issue, is that it takes a very long time, or can take a very long time, if you're an individual who does not have the capital to make it happen. See, with this industry of trading, guys, is that
a lot of companies and a lot of institutions, a lot of educational platforms out there, they come in and they give all these high promises and these high praises, right? It's like, oh, come in and we're going to teach you this, 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 and you're going to instantly be rich and wealthy and all of these claims, right? And then what happens 9 out of 10 times is it doesn't happen. An individual comes in with this high expectation, and yet the expectation is not getting met because, just like they were discussing yesterday, phenomenal job to our CEO, Mr. Corey Cromery, and of course, our VP, Mr. Noah DeFreitas, right? They talked about how it takes patience and discipline. You need that same patience and discipline. Well, back then, you needed a lot of patience and discipline to be able to get to a point where you needed to get the funds to be able to be free, essentially. If you had a goal set in mind, that $10,000 a month mark, well, if you didn't have the capital to make that happen, it took a very long time to get to that point, being disciplined, being patient, right? There were times where I was still trading and I was working jobs. I was doing Uber because I wanted to I wanted to get there. I was just obsessed with it. But anyway, if traders can showcase, this is what I'm getting at, guys, funding programs, if you can showcase the firm that you are disciplined enough to follow the rules and adhere to some risk management protocols, simple risk management, then the firm will allow you, people like you and I, to trade. Now it's evolved into all industries: forex, crypto, indexes, metals, some equities. There's some funding programs that allow equities to be traded on it with their money, and then you can take a profit split. This is kind of like, it's very interesting and it's very amazing because you're kind of like, you can become your own entity in a sense where you can have all of these different funding programs and you're basically like your own private equity manager in a sense of sorts, because you've showcased your discipline and you got the interest from that firm where they said you are good enough to get our funding. And here, because of your hard work and your discipline and your patience, here's a profit split on that aspect of it. Here you go. Here's a chunk of change, right? How amazing is that, right? Let me get 222s in the chat box if that is amazing for you guys. So obviously a couple of years after I started trading and teaching and, I guess making it, I guess you would say, I started to see prop firms come out a couple years ago and it was very new. And I was like, wow, this is very interesting. However, the beginning was, I'll say, is way worse than it is now. Obviously, all these programs have evolved over time, but it was like way worse. It was like, and I'm going to go over some of those things and how they've evolved and to getting us to the point of where we are at today. So let's take a look at the beginning of prop firms. Well, when prop firms first came out, they set really unrealistic expectations. And these expectations were in the form of high testing fees. Testing fees were way higher than they are today. Yet even monthly fees, where they said, hey, you have to pay this X amount of monthly to have access to the capital. So even if you were funded, you still had to pay a monthly fee to have access to it, even if you passed the assessment. This is the beginning of it. They had stricter rules. Like they had rules so strict where, I'm just not going to get into it. Time limits. They had time limits on all of their stuff, meaning I needed time limits. There's minimum trading days. You needed like 14 or 21 minimum trading days, meaning that you needed to trade on the account for that many days before they even looked at your testing and to see if you get funded, right? It was harder to withdraw and there was a lot of unregulation. That's a big no-no. No unregulated stuff here. So how have prop firms evolved since that time? Well, prop firms have evolved because now there's less fees, okay? There's no monthly fees. Basically, I haven't seen a lot of ones that have monthly fees out there, but the testing fees are a lot less than they were. The rules are a lot simpler. They now have regulation, or most of them should be some sort of regulation or have some sort of regulated brokerage behind them. EAs are now allowed. It's something that's coming out in the mix and everything. And then it is trending, right? It wasn't trending before, but now over time, people are waking up to the realization that funding is typically like OPMs, which if you guys don't know what OPMs are, it stands for other people's money, okay? So you understand the leverage now that you have with other people's money. I look at it like this. The successful individuals like the Grant Cardones of the world, the Robert Kiyosaki's, the Manny Koshabins, who are, big time in real estate, they always say you leverage the bank's money. You leverage other people's money. You're not putting your own capital at risk. So being a participant in one of the largest financial markets in the entire world, which is trading, Forex trading, commodity trading, crypto trading, why wouldn't you do the same exact thing? Why wouldn't you leverage the fact that instead of my capital at risk, I can trade other people's capital, and then I can spend more time with my family, give back to mom and dad, retire mom and dad, go buy real estate with it, whatever the case may be. I don't know. But why wouldn't we do that, right? And that's that kind of concept right there has allowed prop firms to be now the newest trend. And we are simply trying to get kind of ahead of the trend before it gets massively, massively bigger. This isn't a statistic or anything like that, but I am a firm believer that in the next 1 to 2 years, over 90% of people that that trade will be participating in funded accounts. It just makes sense, right? If you agree with that, put agree in the chat box, because why wouldn't you? Even us as professional traders, myself, Noah, Jamari, Meche, you're going to hear from here in the second half of this boot camp. They all leverage funded accounts, OPMs. It's not a discredit to who you are as a trader. It's smart, So in a sense, that's how they've evolved, become more trends. I want to dive into now, again, I kind of touched on this already, but why should we get funded? And again, I'll say this one more time. We should get funded to have the capital necessary to make enough gains to live off on. Because let's be real. Most people, they have $200 to $1,000 to fund an account, right? That's not a statistic. Again, just from what I know by being in the industry and teaching for the last 8 years, almost a decade, I know that most people have $200 to $1,000 to put into a trading account to trade. But the sad reality of that is that income, that account size balance, $200 to $1,000, in 90 days, is it going to make you rich, or is it going to make you free, or is it going to make you be able to quit your full-time job or your career? Most likely not, because based on statistics, based on risk to reward, based on how much you risk per trade, it's just not going to happen. But if we were able to now use the skill sets, come in and learn and teach, and then use that same $200 to $1,000 and buy a test to get $100,000 in funding, well, that makes a lot more sense, because it's the same exact thing. I love what Corey talked about yesterday. He was saying, again, the same concept. You may not have a lot to start right now, but why not use that same money? If you're going to put $200 in a trading account to try to trade and grow your own money with anyway, why not use that $200 into testing for that bigger amount of funding? Because even on the profit split, you cut down the time drastically to get you to where you want to be. I don't know what your goals are with trading. I don't know why you're looking at trading. That's up to you and you only. But most of the time, what I found is people like the concept of freedom. Do you like freedom? Maybe it's the freedom to do whatever you want when you want. Maybe it's the freedom to not have a boss tell you when you can't have off work, or when you can't go to your sons or daughters' school plays or soccer games or basketball, whatever the case may be. Maybe it's to have enough money to give back to mom and dad. Maybe mom and dad are struggling. I do not know. But what I do know is that you are on this call for a reason. And we are doing this boot camp for a reason. And this is the reason, guys, is with our platform, Driventrading, successfully, again, I'll relate to what Corey said yesterday, that successfully, over the fruition of Driventrading, we have taught people the skill sets of trading for real. Meaning that we have testimonials, massive amounts of testimonials from people from all walks of life. Whether they're 67 years old, whether they're the single moms, or the family individuals, right? The dads, all these people, the people with full-time careers, the attorneys, all these individuals, they've came into our platform and they've learned the skill set of trading to make them become consistent. So our vision and driven has always been to have someone come in through our education. And now through this partnership we're going to announce is to be able to have somebody come into our platform, learn, and then basically test, use the information, the education, and maybe, I mean, you have everything to your advantage. You have all the live rooms that you can trade on the funded account test with, or even a funded account with. We have people doing it right now as we speak through our live rooms, through our application and stuff. So why to get funded is so you're not putting your own capital at risk. We understand the beginning because we were there as well. Not just the whole entire trade team, but I was there as well, where I was doing the Uber. I didn't have a lot of money to trade, but I started my journey of becoming a trader. And then through time, I was able to get to a point where I'm at, even without this, but it took a long time. And now we're able to cut that down. Our goal is to cut it down basically in half, right? So that's the reason to get funded. Let's go to some certain program types that are out there in the industry in regards to prop firms and funded accounts. We're going to dive into it real quick here, give you a lot of information. So take some notes. We're going to go over first one-phase programs, okay? One-phase programs. And this is basically just a one-phase program. What happens is that you go and you buy a test exam, whatever size account that you want. You know, all prop firms range from 25K upwards to some of them do $1 million. Based on that account size is the fee that you will pay associated with that. But one phase programs are just that, one phase. I reach a certain profit point, profit target that is set by the firm, and I get funded. If I reach that, boom, I get it. Wait a couple days, whatever the case may be, go through contracts, all that stuff, and I get funded. The thing behind that, though, is that you need to adhere, again, to those risk management protocols. You know, what's the drawdown limits? We're going to go over that here shortly. One-phase programs are typically higher in price. Why are they higher in price? Well, they're riskier to the firms because, you know, just one and done. Somebody can come in and pretty much, you know, risk it for the biscuit and, you know, win an S&P or US 30 trade. And here we go, I'm funded. So that's more riskier to that firm. So therefore, they increase the prices for that test. Obviously, it's easier to pass. But with that, it's also lower in leverage. We're going to go over leverage and stuff here on this first portion of the boot camp. That's just what a one-phase program constitutes. Now we have two-phase programs. Two-phase programs are the most popular. Why? Well, they're lower in fees. You know, obviously they're lower in fees, but with this, there's two phases that are needed. So if you pass the first phase, it's one profit target, just like phase one. You pass that, then they verify it, get you to phase two, and phase two is usually, you know, a 50% reduction of the profit target. So typically what it looks like is, you know, phase one, I need to reach 8 to 10%. And then phase two, I need to reach 4 or 5% on phase two. And then after that second phase, I get funded. The cool thing about it is it's lower in fees. It's harder to pass. But again, you have way better leverage on these two-phase programs. Let's continue to dive in, right? Standard rules of prop firms. Okay, rules of a prop firm. We're going to dive deep into each of these. You have profit targets, I've already mentioned before, daily drawdown limits, overall drawdown limits. You have leverage, stop losses, and of course, weekend positions. Okay, let's go into it real here. So let's start with the profit targets. Profit targets are just that. They're a profit target. So if I get a one-phase examination and I need to reach a 10% profit based on the program, you will need to achieve that appropriate profit target in order to get to this phase two or in order to get funded. It's as simple as that. We're going to go into next the daily drawdown. This is where a lot of people and individuals get confused. And I've seen a lot of my even own friends, you know, get confused because, you know, they go to a test, they'll know their daily drawdown limits, and then they get an email saying your account has been breached. And they're like sitting there like, why? I didn't reach my daily drawdown limit. And this is super important to understand, okay? Daily drawdown is when you cannot breach the percentage given per that assessment in a given day. So let's use this as an example. We have a $100,000 account with a 5% daily drawdown, okay? If the equity goes under 95K, the account is invalid and the test has failed. Notice I said the equity. It's not closed positions. It's not get the account under the account's at 94K, but I didn't close 5K in losses. That might, as soon as it reaches, whether the positions are open or closed, as soon as it goes past that percentage allotment, the account is breached and it fails. And that's what the firm goes and tells people. You know, a lot of individuals are like, well, I didn't close 5% equity. They'll go down to like $94,800 and they'll go back up above that threshold limit, but it will still be breached because it's open and also closed positions when it regards to daily and the overall drawdown limits. Okay, so you have overall drawdown limits. Overall drawdown is much like the daily limits, where you cannot breach the level of overall drawdown. For example, a 100K account with an 8% drawdown, if the equity goes under 92K, the account's invalid and the test has failed. Okay. Next, leverage. This is something that is super important for you to understand, especially if you're getting into this game of wanting to become a trader, and not only a trader, but to be able to manage these large account balances, is leverage. Understanding how much leverage you have per examination, per test. Okay. Leverage is simply the amount of leverage is based on the amount of lots that you can have at a given time based on the account size to protect against margin calls. Remember, basically testing for funded is doing exactly what we teach you guys in Driven, is becoming a professional risk manager. It's not about getting to that profit target as quick as possible. It's not about let me risk it for the biscuit and let me get all of it on, let me get funded right away, all of these things, right? That goes completely against having patience, having discipline, and understanding risk management protocols, because that's what the firm is looking for. I'll be honest, these firms, when you pass a phase, it is still not a guarantee whether they will give you the funded account or not. Why? Because they look into each and every single detail of how you traded on the account. So if they see, for example, that you had, more leverage than you were given on an account, meaning that you had more lots open, and let's just say, granted, it didn't get in drawdown, so it just booms to the moon and you reached your profit target, where they're going to look at that and say, well, you actually did a soft breach on your account. Here's, you did X amount of lots over of what you're given, and you reached the profit target. Good job. But it's a soft breach on the account, and you can restart for a percentage off your next test. It's pretty much what it means. And you may say, like, well, that's crazy. I just bought my test examination. I spent this money. Why is that happening? Because put yourself in the firm's perspective. If you're a firm and it's your money, would you want somebody else out there just throwing it around like it's a casino? No. So they adhere and they look at the entire account when you pass these phases, which is super important to understand leverage. So example, a $25,000 account with a 1 to 10 leverage. Typically your one phases are around 1 to 10 leverage, okay? Means you can have 2.5 max slots open at a time. Think about it real quick. A $25,000 account, most of you may be like, man, I got the $25,000 account. I'm going to put 5 lots on. Oh man, my account's in profit equity. Now I can put, 5 lots on the next one. No, it's not going to work. You may make some profits. You may do that on your own capital if you want to, over leverage. But you hear this term, over leveraging is against risk management protocols. So therefore, account will be breached, so on and so forth. So you can have 2.5 max slots open at one time. Whereas a 25K account with a 1 to 30 leverage can have 7.5 lots open at a time. Simple as that. Okay. Let's go over stop losses and weekend positions. Okay. So being that you are testing to be worthy of trading another firm's money, you have to show sound risk management practices. It's super funny. Over the last 8 years of being a teacher in this space and stuff like that, there's still people who are like, I don't trade with the stop loss. And it's like, okay, well, you may not have seen what I have seen when you trade without a stop loss. Back in 2000, I believe it was 2016. Somebody quote me if I'm wrong. 2016 or 2017. It was 2016. An event called Brexit happened. Okay, Brexit was based on the British pound. and it caused massive mayhem in the Forex markets. Massive. I know Corey was there. We were there together, and GPB markets just started falling through the face of the floor. And we had people on there who weren't trading stop losses, and all the capital that they took months and months and months to achieve were pretty much gone. Whereas if they had a stop loss based on sound risk management rules, they wouldn't have lost their entire account, thousands and thousands and thousands of dollars. Why is that important for a firm to understand? Because we never know what could happen in the industry. We don't know if the U.S. could default and cause us to market into panic. Here's how I look at it. You need a stop loss in each and every single trade with these prop firms. Okay, you need one. If you execute one without one, it's going to close. It's not going to take away your test. It's going to close that position out. And it's going to say, oh, okay, you didn't put a stop loss on this trade, so we're going to close it out to soft breach. Keep testing, keep doing your thing, but you need a stop loss in every trade. Why do you think that's important? Why do you think they require it for every trade? Because again, you're a risk manager. You're showing them to be worthy enough of their capital to trade and treat their capital as if it were your own. Now, there's another dilemma to that where, well, if it was my own capital, I wouldn't trade without a stop loss. Well, that's up to you. That's not up to me. I wouldn't do that because I know anything can happen at any time. Those stop losses protect. Again, stop is a protection against your account. Let's go over weekend positions. It's the same thing. A lot of people are like, well, the trade wasn't done. I'm swing trading. I'm doing all these things. And a lot of firms, they require you to close weekend positions before the weekend happens. And people are like, well, why is this? I'm a swing trader. This is baloney. Here's an also reason is over weekends. I've also seen, again, I've been teaching for 8 years, guys. I've seen things happen over weekends that causes massive slippage and massive gaps in the market. Whereas if I was in a position before the weekend happened and I'm in a little bit of profit, I'm like, this thing's swinging to the moon. And then the weekend opens and then boom, stop losses hit. As soon as the market opens at 5 p.m. on Sundays Eastern, my position's closed and you're sitting there wondering why. It's because gaps and slippage happen or can happen over the weekend. So again, in reference to firms and prop firms and other people's money, do I want that to happen to, let's say you have a $500,000 trading account, fully funded, live. And let's just say, oh, weekend positions, this and that, and something happens and the firm is at risk. You guys understand? It's not you at risk, it's the firm at risk. So that's why they allow and have these rules set in motion. So let's continue. I want to go over some limiting rules of what to not look for in some of these prop firms. Most prop firms today engage in limiting rules. So, limiting beliefs, much like limiting beliefs, when limiting beliefs, they limit your mind to see something that could potentially change your life. You hear about this all the time. Oh, he has limiting beliefs. No wonder why he's not going to be successful, yada, yada, yada. But the same happens with limiting rules. Limiting rules can limit your success in trading. So, time limits. We always mention how trading requires patience and discipline. However, many prop firms have time limits that can put pressure on people like you and I, on a trader, to reach a target on time. For example, you need to reach 10% within the first 25 days or 20 days or 30 days. What that does is it puts 10% is kind of average, but not to everybody, especially somebody that may be new. It can be very difficult. So what happens when they spend their hard-earned money on a test and they come in and they're following patience and discipline, they're waiting for the right setup, just like we teach them, and then now they come in and they're on day 28 and they're 3% away. Well, now they're pressured to get to that because the account will be breached if they're not done in that certain amount of time frame. Okay? Puts a lot of pressure on that. It's a big no-no. The other thing, flip side of that, is minimum trading days, right? What's minimum trading days? Well, minimum trading days, days of trading, required days to trade, can also be limiting. What if I come in and, I'm following the same risk management rules, drawdown and stuff, and I'm just scalping on the day, and I'm putting a stop loss in every trade. I'm managing leverage, and I'm able to pass a 1 phase in 1 day, or a 2 phase, or my first phase in 1 day. Maybe I can pass my first phase on the 2 phase test in 1 day. Well, some of them have a minimum trading days, meaning, you need 7 minimum trading days, 5 minimum trading days, 14 minimum trading days. What does that do? I'm sitting here on day 1, and I just followed all the rules, and I'm basically ready to get to phase 2. And now I got to sit on my hands. Again, it's still patience. Now I got to sit on my hands, and I have to execute trades for the next 7, 14, whatever days to pretty much get to phase 2 or my funded account. That's a limiting rule. Okay. Let's go over some more. Drawdown limits. Okay. Some prop firms have very little drawdown limits. On the flip side, some prop firms have decent drawdown limits, but they don't scale it in reference to the account growth. Meaning, if I'm growing the accounts, they're not moving or they're moving the bar up, right? They're not scaling, right? So drawdown limits can be limiting. It's not that much of a limiting rule, but I just wanted to put it in there for you guys. That makes sense? That makes sense. Post some $ in the chat box. Let's see those $ in the chat box. Going to bring this up. All right, got some good people in here. So that brings me to the next part of my talk. It's something that when we're looking at these limiting rules, and we're looking at all of these different things and how we can protect our people, and time limits, time constraints, limits, all these other things. What Corey did was, his goal was to have people, again, come in here, have our education, learn from our education, and potentially go and test to get funded. So then they can use that funded account and the money on the profit split to go and, change their life, get them, bridge the gap, right? Break the gap of having a long time to get to where you want to go, and kind of bringing that down to getting there a lot quicker. Okay. And he was looking at a lot of other things and stuff out there. A lot of the stuff is, harsh. A lot of the stuff has a lot of, rules to adhere to. Before I bring up this next slide, guys, I need some energy in the chat box. I need like, let's go, flames, popcorn, movie or something. Because, through all of this time, and it's been a long, long, long time, we found one that is very, 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 very good, like very good. And I'm going to announce it right here. Super excited to do it. Let's go. Let's go. I know it's a delay. So without further ado, guys, we have partnered with Impact Trader. Okay. I'm going to go over the rules on Impact Trader here. And it's one of the most amazing platforms I've had the honor to see. Corey saw it. He was like, Jay, you got to check this out. And it's absolutely amazing. It's funding for aspiring traders. It's the industry's most dynamic, check this out, and fully customizable program. That's right. Customizable, meaning what? You have 1 and 2 phase programs. Check this out. No time limits. No minimum trading days. Simple rules. You have up to 90% profit shares. You even have withdrawals on the same day. Meaning if I come in on a 1 phase test and I pass that test and I get my contract, and granted it takes 24 to 48 hours, to get your contract done as an independent contractor with that firm, and to get a funded account. Let's say you come in past phase 1, same day, I get my funded account the next day, and I make $500 on that account on day 2. I can withdraw that on that day. It's no longer, I need 30 days of trading before I can do a withdrawal. Now, I will say, as soon as you withdraw, it does do that 30-day, and every 30 days you can do it after that, but you don't need to wait 30 days. What does that do for individuals like you and I? That means that, and what I've seen is people will get a funded account. They need 30 days of minimum trading days to be able to withdraw and release those funds. And within the 30 days, they don't pass, right? they end up doing something or some type of rule gets broken. There's so much time. So this way we can get somebody's foot in the door, come and pass. Let's say day one, they make $500. Well, there you go. Withdraw, you get your testing fee back at least. And then at that point, you're break even and you have a funded account to go. How amazing is that? An ASIC regulated broker and funding up to 500K. I will say this, looking into their platform and things of that sort, is that it's not just 500K. You can get upwards to 900, believe it or not. And I'm just telling you guys because you can get a 500K test, and then they don't have a scaling program, but you can buy a 400K test and you can trade both of them, synergistically. It's very easy to do. You have a MetaTrader 4, MetaTrader 5 up. It's also available in both MT4 and MT5 directly with the ASIC regulated broker 8cap. It's absolutely amazing, but you can get those two different exam late. Maybe it's 400K and 200K, whatever it is, you can have that amount to trade and split on. You just can't have two of the same tests. You can't have a 500K funded account and then buy another 500K testing account to get $1 million yet. But I do know that they plan to scale up to $1 million in the next 6 to 12 months. So that's just something that's out there. Anyway, let's go over customization, right? Impact Trader is one of the only firms that allow you to customize your assessment. What does that mean? I get to customize my tests. If I want increased leverage on my account, well, guess what? I can choose increased leverage and pay a small fee. If I want up to 90% profit split, I can pay a small little fee on my tests, and I can get up to 90% profit splits forever on that funded account. If I want weekend positions, hey, I'm a swing trader, I want to hold on weekends, I can choose whether to have weekend positions or not. If I'm that trader that says, hey, I don't want no stop losses, or I trade with no stop loss, cool. Well, guess what? It will allow you for a small fee to have that option to have no stop losses on your assessment. This is absolutely one of the most craziest things I've ever seen in the prop firm space, and I've seen a lot out there. There's nothing else out there like it in the entire industry like Impact Trader. So let's go over some one-phase programs, right? No time limits, meaning you can get funded the same day, right? Profit targets, 10%. So if I reach 10%, boom, I get funded within 24 to 48 hours. That's it. As long as I adhere to the drawdown rules. Daily drawdown is 5%. Wow. We say wow backwards in the chat box. Overall drawdown is 6%. And then the leverage is a 1 to 10, but you can do a 1 to 20. You can double your leverage on one-phase programs with that add-on. Let's go over two-phase programs. No time limits. No minimum trading days. I can't tell you how many times I've gone through myself, and it's like I pass it on day 2 or whatever, and it's like, man, I gotta wait 4 extra days or 3 extra days to get to my second phase. I want to get to phase 2 now. And I understand patience and discipline, but there's no minimum trading days on these phases. If I pass phase 1 on day 1, well, I can go right to phase 2 that day or the next day, right? Profit targets, 10% on the first phase, and then only 5% on the second phase. Drawdown limit is 4%. The overall is 8%. Check this out. On a 2-phase program, their leverage is almost triple that of a 1-phase program. That means for every 25K, I can have 7.5 lots open at a time on a 2-phase program, okay? So I want to just touch on 2 of these frequently asked questions. They had this on their site and stuff. I've been looking into it. But let's just say, how long does it take to become funded with Impact Trader? Well, they say, unlike many other firms, they don't require a minimum amount of trading days. Simply achieve the profit targets with your chosen tier and phase program while not incurring the daily drawdown or maximum drawdown limits, right? Isn't that pretty crazy? Okay. What happens once I've passed the Impact Trader audition, right? Unlike many other firms, what they say, that take 2 or more business days to review your assessment, Impact Trader will get you into a funded account within 24 to 48 hours. As soon as you pass your audition, an email will be sent to you by Deal, which is much like a MassPay or a PayPal type of sorts, but it's legit. Our withdrawal payment processor, Deal is their withdrawal payment processor. To set up your account, please allow 24 to 48 hours after you register your Deal account to get funded. Guys, I've never seen anything like this out there in this industry. I'm so excited for Driven to be partnered up with them and be able for them to welcome us into them. Some more announcements and stuff will be coming soon. I know Corey's going to want to do a lot of stuff on announcements and discounts and sorts of all that fun stuff. But I mean, this broker has tradable instruments and asset classes like Forex, cryptocurrency, indices, equities, metals, oil. You can trade ASIC regulated, like I said, and it's just super, 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 super amazing, guys. So that is my portion of this first half of day 2 on this Funded Trader Bootcamp. If you guys are excited, let me see some 777s in the chat box. I'm seeing the chat box now for the first time in the last 40 minutes. But let me see this right here. Wow. Yeah, guys. Wow. Let's go. Exciting. Good stuff. Corey says million accounts will be available within 12 months. Oh, yeah, for sure. Yeah, definitely. Good stuff. I'm excited to start. Driven is the place to be. Thank you. Thank you for helping us change our lives. Hey, this is what we do, guys. We can, we're independent traders ourselves. We can trade, any amounts of money and stuff. Corey, the team, Noah, Meche, who you're going to hear from now, absolutely beast. But like, we're here for you. We're here because we understand the hardships of starting out and trading and the hardships that can occur, because whether you have a family, full-time job. I had a full-time job as a salesman when I started trading. And then I was crazy and I quit that job, but I knew I was destined for great things and places. And then, brought me to doing Uber and stuff. And I made it happen, but it took a little bit of time. We're here to cut that time down for you guys. So I'm super excited, guys. This funding program is, again, one of the best I've seen. But without further ado, with that said, I've been talking a lot about risk management and how important risk management is. I want to put this into perspective for you real quick. And I went over this on our call at 9 a.m. with my students here at Driventrading. And yesterday we executed two trades. I had 2 trade ideas. One was on a USD CAD and one was on the SPX 500. Now, the SPX 500 was a loss, and then the USD CAD was a win. So technically what people look at is, hey, 50% trader, oh, it's 50%. However, the USD CAD was a 1 to 2, was like a 1 to 2.2, and then the SPX was just a -1. And this is why risk to reward I call it invalidation space and free money space. You need a very small invalidation space, free money space. Hey, that's a great trade. But however, I did the math. Okay, if we had a $500,000 testing account, I want this to literally like blow your minds. From yesterday alone, if we had a $500,000 funded account and we traded those two trades just yesterday, Tuesday, the profit split, right, from that would have been $4,000. That's right. Yesterday, 50% on the trades, yet the profit on the account would have been my split, my withdrawal. I could have withdrawn would have been $4K. Here's why that's important. Imagine you do that just once a week. We're done by Wednesday. I didn't get to trade today, Wednesday. It was Tuesday. Imagine being done by Tuesday and you have the rest of the week to do whatever, and that's that. Now you see the importance of funded accounts and the importance of understanding risk management. So I want to bring on the next speaker, Miss Meche. She's an absolute phenomenal individual, phenomenal trader. She's a mom, and I've seen her grow so much in the last how long, Meche? Almost 2 years now of getting to know her, and she's just drastically evolved. They call her the US 30 queen. Shout out to her. US 30 is not an easy pair to trade, but somehow she's been able to master it and stuff like that. And she's gone through her education and stuff, and she's become an absolute monster in this space. So Meche, tell the people on this boot camp for the second half how to adhere to some risk management rules and give them some tips and tricks along the way.
Thank you, Jay. Hello, everyone. Welcome again. Happy to see you all in here. Everybody is so excited. Put some flame in the chat for some dollar signs, some everything for Jade for this amazing presentation. I'm sure all of you are so excited about this new partnership that we have with Impact Trader. What a name also, right? What's our goal? And as Jay was saying, is impact as many lives as possible. And that's, I know it's Jay Goal, I know it's Corey, our CEO goals, I know it's IX Global Goal, and I know it's Driven Goal. And that's the idea, impact your life. And this is the way. I found this way many years ago. I found a trade funded accounts uh, some time ago, and I see the potential on this. You have the potential of changing the world. Actually, everybody speak about changing the world, but we have the potential of changing our life and changing the life of all of you that are there. I'm sure when Jay was talking about a 500K account, that's probably more than what you make in a year. That's probably more than what you make in a year. And put some number one in the chat if 500K is more than you make in a year. Put some one in the chat, and I know it's some delay in the chat. So imagine the power of having an account that you can use, that you can trade on, that you're gonna start with more capital than what you can make in a year, and probably in 2 years or 3 years or 4 years or even 5 years. I know there's a lot of people that don't make that kind of money even in 5 years. And if you don't live in the United States, if you live in a third world country, for sure you don't make that kind of money in 5 years. Because I'm from Venezuela, I'm from a third world country, and I know that's a huge amount of money. And that's a huge amount of money for everyone. When you start trading and you start manage those funding accounts, you realize that that amount of money, it's normal, guys. And you start normalize that amount of money. And that's beautiful. Because your focus is not even more in money. Your focus is on getting better. Getting better. And money just come as a byproduct. And that's the beauty of this. I'm so excited with this program. I know there's a lot of excitement in the chat. If you hear some noise from my computer, it's everybody texting me and send me message like, I want to do that funded account just right now. Wait, you still have 1 more hour with me, and then you have another part of the bootcamp day 3 tomorrow. Patience is key, as Jay said. So let's relax. Let's have patience, okay? Because that's one of the things that we need to take care of. One of the problems that when you have those kind of accounts is that you get greedy, and you want more, and you want more, and you start thinking, oh, what I'm gonna do with all this money? Relax, take it easy. It's not gonna go away. The funding problem is gonna be there. So relax, take it easy, plan what you need to plan, because this is the beginning of changing your life. So don't take it like a game, okay? So for the ones that doesn't know me, my name is Meche Maria Maldonado. I'm from Venezuela. I've been living here in the States for the last 9 years, and I have been learning trading for the last 4 years, 5 years, and this definitely changed my life. I'm a mother of 2 kids. I have a husband. I have a house to run. And for the women, there's some women in here, some ladies in the chat. Some. Let's see the ladies here. Let's see the ladies traders. And for me, it has been changing because it gives me so much time. One of the things that I learned when I start trading is that you need to focus on your why. You need to know which one is your why. And for me, my why is my family, my kids, my husband, and I focus everything on my why. And this is just a vehicle to live the life that I want. Not the life that it's in Instagram, not the life that is in Facebook, not the life that somebody else have. My life is the life that I want. So I encourage you, each and every one of you, to go and find your why and put it in front of you every single day. Because with this founded program and after this founded bootcamp, you're going to have the ability to achieve your why and to get that why. So go ahead. The first thing that you need to do, go ahead and find what is your why. You should have it already. Okay, if you don't have it, go and think about it. Find your why, put it in front of you, because you're gonna make it happen. It's gonna happen, and it's probably gonna happen for sure before of the end of the year. So you need to be clear on what you want. What you want and what you think about, it's gonna happen. So be prepared. That's the first thing that you need to do. So after this journey about trading, after I start like every one of single one of you. I'm an immigrant in the United States, so I didn't have a lot of capital to invest in my trading account. So I opened one trading account with $1,000. I grow the trading account. I blew the trading account, as everyone. I'm sure there's a lot of people here who blew a trading account, who went from, I don't know, $1,000 to $2,000, and you were like, oh my God, I doubled my trading account. I'm the greatest. I got this. I have everything. I learned every technical analysis. I have a perfect strategy. I'm done. I'm gonna get this account to 10K, 25K, and the next day you just blow it. Just like that. Yes. And I can see some me, 111 in the chat. And that happens. And that happens a lot. And that happens to a lot of traders. And that's a normal process. And that process normally starts because we don't have a risk management. We don't believe when we start trading that we really need a risk management. And it doesn't matter that everybody said, yes, you need risk management. Yes, you need risk management. We are talking about all this. And I know a lot of people just probably thinking, okay, are you going to teach me some technical analysis, or are you going to teach me your strategy, or what are you going to talk about? And no one said, yes, that's true. We need risk management. And that's the most important thing that you need for your account. And if you're going to go into a funded account, that is key. If you don't have risk management, you are not going to pass the challenge. And if you pass the challenge, you're going to blow the account just in the first 3 days. If you pass the challenge and you don't have risk management, I'm going to give you 3 days with the account. And that's it. And I'm completely honest with you, because it happened. I have seen that happen many times. Many times. Maybe you pass the account because 3 times to me, say someone there. I have seen passing the account and then get so excited, no risk management, boom, blown the account in the first 1 day, 2 days, 3 days. So it's not only about passing the challenge. It's about keeping that account and make your living from that account. So with that, I'm going to share my screen here. Let me be patient. Remember, share screen. I'm sharing the screen here, and I'm going to give you, I think I'm sharing the screen. Yeah, there you go. So a little bit of disclaimer, as always, I'm not a financial advisor. This is just for educational purpose only. As you know, trading involves risk, and past performance does not guarantee future results. So as I always say, be careful with your accounts. So today we're going to talk about risk management, okay? And how to become a professional risk management. If you hear when Corey spoke yesterday, our CEO have an amazing presentation yesterday here in the same channel on the day one of the bootcamp. And if you haven't seen it, go ahead after this one and go back to the day one and watch the whole thing, because it was amazing. It was Corey and Noah speaking yesterday, and they have an important information that you need to know. So if you haven't seen it, go ahead after this one and go back to see it, the day one presentation. So he speaks about risk management. And if you watch Jade, that came before me, he speaks about risk management. So why everybody is speaking about risk management? Because that's what you need. Becoming a professional risk management is key. For me, That's more important than any strategy that you can have. That's more important that, I have a win rate of 90%, of 80%, of, I don't care. What's your risk management? Because you can have a win rate of 90%, and in that 10%, you can lose everything that you win. And that's what people don't understand. Sometimes they say, oh, I have a 90% win rate. Yeah. And how much you lose when you lose? Nobody asked that. When you lose that day, maybe you can lose the whole 90% that you win. So it doesn't count. So becoming a professional risk management have to be in front of your face every single day. You are not a trader. You are a professional risk management. And if you do that, if you are a professional risk management, I'm going to tell you something. Your account is always going to be growing. Always going to be growing. There's no way that your account is going to be backwards. Your account is going to be growing. And if you ask every single one of the traders why your account sometimes go in drawdown that much, because you are not following the risk management plan. And that's the truth. And sometimes people don't like when you speak the truth. But it's the truth. We don't like to hear what we don't like to do. So risk management, you need to have 3 things. Okay, we're going to talk about trading plan. Yeah, that 2 words that we always hear when we start trading. Oh, you need to have a trading plan. Oh, you need to have a trading plan. And a lot of people like, yeah, okay, trading plan. I know people that have been trading for a year and they don't have a trading plan. Write it down. You need to have a trading plan. You need to have a risk management plan and a calculator of that risk management. You need to know how to calculate that risk management faster than you calculate how much is 2 plus 2. You need that. And you need your set of rules. And you don't break rules. You shouldn't break rules. We all break rules, but we shouldn't break it. So, trading plan. What do you need in trading plan? Every trading plan is going to be different. And I'm not going to tell you what do you need to put in your trading plan. Your trading plan is going to depend on your strategy. It's going to depend on what you're looking for. It's going to depend on what type of trader you are. Maybe you are a swing trader. You're going to have a different trading plan than if you are a scalper. Okay, so each and every one of you, each and every one of you are going to have different trading plan. But what all of you needs to have is write down that trading plan. Write it down. I like to write it down in a piece of paper with a pen. I have it in my computer. I have it in my cell phone, in my notes. I have it everywhere, but I also write it down in a piece of paper in my notebook that I have next to me in front of my computer every time that I'm gonna trade. Why? Because when you actually write it down with a pen, you are activating something in your head that when you write down, it stick with you. And if there is young people here that probably say, why I didn't write it down? I don't even have a pen. I write down everything on my phone and the computer. I don't even write it down anymore. I just talk to Siri or talk to Alexa and they write it for me. Wow. That's a way, but I'm old school and I write it down, and I recommend you to write it down. So write down your trading plan. I love what someone's saying here in the chat. I am a professional risk manager with a professional trading plan. Love it. Love the affirmation. Love affirmations, but that one is really good. Okay? So have it after you write it down. You need to have it in front of you. You need to have your trading plan in front of you. Every time that you're going to go into the markets, every time that you're going to sit and analyze the charts, you need to have your trading plan in front of you. And I'm going to quote Corey in here. He said something yesterday, that a story about his mentor that has been trading for 30 years, and he still have his trading plan, he trading his risk management plan and his rules in front of him. And it's not because you don't know it, it's because you need to remember. It's because you need to have it there. It's like it talks to you when you have it there. And you're gonna do something that you shouldn't do, it's gonna talk to you like, hey, you're gonna look at it, and I'm looking this way because I have it here. You're gonna look at it and you're gonna say, I cannot do this. It's like the police. When you're going higher than the speed limit and you see the police, you're gonna go down. Same thing. Imagine that your trading plan or your risk management plan is like the police. It's watching you and it's watching whatever you're doing in the computer. So if you have it there, it's watching you. Every time you're going to do something that you shouldn't do, it's going to go like, you're going to do that. You shouldn't do that. That's not what the plan said. So have it in front of you every time that you're going to train, and follow it. Follow it. You don't do anything if you have your trading plan, if you write it down and you don't follow it. So why you do it? Be honest with you. If you're going to write it down and you are not going to follow it, why are you even taking the time to write it down? Don't do it. So risk management plan and calculator, and I did this on purpose. If you see this presentation, trading plan has the same 3 points that the first 3 points of the risk management plan and calculator, because it's the same thing. Trading is not complicated. We overcomplicate things. We normally, as a human beings, overcomplicate things. So risk management plan and calculator is the same thing. You need to write it down, you need to have it in front of you, and you need to follow it. That's it. You need to follow it. You need to have it in front of you. As the police, we as a human being love to break rules. So we have the police here that makes you follow the rules. And that's so true. And I realized that when I get to this country. I'm from Venezuela. I'm from a third world country. And we know that sometimes we don't follow the rules because we don't have punish. We don't have a police. I mean, we have police, but doesn't do anything. So you don't care. You skip the red light because nothing is going to happen. Nobody's going to take you a picture of your car and send you a bill. You go over the speed limit because nothing is going to happen. No one is going to stop you. So we as a human, we need that police. And our police in training, it's our plan. It's our plan. But it's only our plan if we have it in front of us. If we have it in the drawer, or we have it back in the, I don't know, in the folder in a computer behind that, we don't care about it. It's not looking at us. It's not watching us. So it's not going to tell us anything. So have it there. And calculate your risk for every transaction. Every transaction that you're going to put, you need to calculate how much you're going to risk. You need to know how much you're going to risk, and you need to calculate your loss. Don't start trading like I'm going to say like a rookie. Don't do that in a funded account. Every single asset that you're going to trade, it probably needs to have different lot size. And sometimes you're going to risk certain percentage in an asset and a different one in another asset. So you need to know all that. And at the beginning, and sometimes I still have it, you have to write it down. I always teach that in my classes in Driven. Write it down. Have an Excel sheet or in your notebook, whatever you want. I have to write it down. How much percent that I risk in this pair? How much percentage I risk in the U study? How much I'm gonna risk if I put that many points of stop loss? Everything, write it down. It makes you easy. But you need to calculate it, and you need to be good at calculating. I remember last event I was talking to someone who has, I think she was trading for 6 months, and she told me, I don't know how to calculate lot size. You cannot be trading if you don't know how to calculate lot size. You cannot be putting transaction if you don't know how to calculate lot size, because you are not following a risk management plan if you don't know how to calculate lot size. That's a basic one. And if you're gonna do one of those funding accounts that we are all so excited, I think Jay put it in a slide, it's 5% drawdown in a day. So you need to be careful. This is not a game. This is not something to play. This can give you more in a day, as the example that Jay put, that you make in a month. Normal, the average people in the United States doesn't make $4,000 in a month here in the United States. The average people doesn't make $4,000. And with the example that he put, he made it in just one day. Even having one transaction stop loss and one transaction take profit. So 50-50, as he said. And let me tell you something. That's normal here in Driven. Maybe you are not used to it, but that's normal here, because we are professional risk management. So the last point is the rules. Rules about your daily routine, about your daily trading. Same thing. I'm going back again. Same thing. Same 3 things at the beginning. Write it down, have it in front of you, and follow it. I hope everyone remembered these 3 things after this presentation. I'm not the best in speaking English, but I think you understand that you need to write it down, have it in front of you, and follow it. 3 different things: trading plan, trading management plan, and rules. And the only 3 things that you need to do with the 3 of them is write them down, have it in front of you, and follow it. So I want everyone who's watching this presentation, watching this live in YouTube or Facebook, or everyone that is watching the recordings, because this is going to be recording in YouTube, to know this. And no one can have an excuse. Oh, I didn't know. I didn't understand. Meche, she speaks so bad English that I couldn't understand what she was saying. You have it here. Write it down. have it in front of you and follow it. And the rules, whatever your rules are, because again, every single one of us is different and we're going to have different rules. The rules are going to depend again of your risk management, of your trading plan, on what type of trader you are, what works for you, maybe doesn't work for me, of what works for Corey or for Noah or for Jay or for John or whatever, maybe doesn't work for me. So it's your rules, whatever you want, but they're yours. So this is better than the normal life. You even have the ability to make your rules. When you're living in a society, you're going to live by the rules that the society put. Here in trading, you're going to make your rules, the ones that work for you. But even though we made it for us, sometimes we don't follow it. Even though we put it, we made the rules for us. We say, this is the rules that I need. These are the rules that I need. With this rule, everything works. My trading plan works. My risk management plan works. Everything works with this. I put it for me, and I don't follow it. So you need to have the 4 point that I have here in rules. Human nature. That's so true. Punish and finally punish yourself every time that you break a rule. Same thing as the society. Every time that you break a rule, they punish you. So here, in trading, every time that you make a rule, you need to punish yourself. I love it because I don't know if you connect. If you haven't connected, I recommend you every single Monday at 1 p.m. Eastern time. We have the Trader Talks. I know I was talking about this Monday. How he punished himself when he lose more than he supposed to in the account. And he goes and find the money to put it back in the account because otherwise he's not able to trade. Why? Because you break the rule and you over leverage, or you didn't put the stop loss, or you whatever happened, whatever rule you break, you lose more than you're supposed to do. So he go and sell the PlayStation to put the money in the account so he can be able to trade again. I love that. When I hear that, I say, oh my God, I love that punish rule. Because that's something that's going to hurt you. So do something. Again, in this perfect trading world, you can make the rules and you can make the punish. But be honest with yourself. The worst thing that you can do here is lie to yourself. Be honest with yourself and say, yes, I break the rule because I'm a human. I break the rule. And I have this punish and I need to follow this punish and that's it. So it's going to hurt me. I don't want to do it again because it's hurting me. Well, as Corey always said, he stopped trading for the week if he break that rule. And it can be the best setup ever. You punish yourself and you stop trading for the week. But you need to have something. Otherwise, normally you just repeat the same pattern every single time. And never ends. And these 3 things here. Your trading plan, your risk management plan, and the rules are going to be key for this funded account. All of you here in this live session, all of you are capable. If you are driven, if you have the correct education, all of you are capable to pass one of those funded accounts and to be a funded trader. We have more things to come. We have a new course. We have everything. We have everything in Driven that you need to pass the challenge and to be a founded trader. But you need these three things. You need to have a plan. You need to have the risk management, and you need to have the rules. And I'm going to recommend you something. Do this before you have the account. Don't do what normal people do. They go get the account, they blow the account, they don't pass the challenge, or they blow the account after they pass the challenge, and then they say, oh my God, yes, I need the three things. I'm telling you what you need now. Corey told you yesterday. Jay just told you. Go and do it. Go and do it. Have those three things before you have the account. So you can start the account how you're supposed to start it. So with this, I'm going to stop sharing this screen, and I'm going to share what all you wants to see, because I know that all you wants to see this. I'm going to start sharing again the other screen. Give me some time. Okay, is this one? I know you all wants to see this. I know. Everybody is like, okay, are you going to tell me something about the chart? Put me trading view there. I want to see something. Yeah. So there it is. So I want to talk about a little bit more about risk management. Okay. And I'm going to talk about this with this example in the charts. So this is, I mean, you can find this in whatever asset you trade. I do US 30 as Jed said. So all my examples are going to be in US 30. But you can do it in whatever you do. If you do USD JPY, it works. If you do S&P 500, it works. If you do GBP JPY, it works. If you do Euro USD, it works. It works everywhere. It doesn't matter. Forget about what it said here. It's the same thing. There are candles, there are different time frames, and that's it. Every market has their structure. Every market has everything. And you can apply risk management for every market. So let's say we are here in the US 30, and let's say that I'm going to put a transaction here. If the market comes again to this point, I'm going to put a transaction. So I'm going to go, maybe I need to put this to go faster. Not that fast. So if a market come here again, I'm going to put a transaction. So what I do, I just put my thing here. Okay. And I'm going to wait. What I'm going to do, I'm going to put a transaction. Where it's going to be my stop loss, it's going to depend on what the market is doing. So what the market is doing, oh, it came all the way to here. Okay. So I'm going to put a transaction. I need to go higher than this candle. Okay. All this you're learning in Driven. Okay. If you are in Driven, you know that you're going to enter here. Okay. And your stop loss is going to be here. Everyone that is in Driven already know that. So you keep going. And you say, I'm going to enter there. So what happened here? I'm going to have this number. Everyone that has been in one of my classes know this is my favorite number. This thing that say here, risk to reward ratio, this is the only thing that I care about. This is the only thing that I care about. And for one of my rules, I have one rule for me that it doesn't have to be the same as you. That if this is not at least 2, I'm not going in the transaction. What is going to define this? This is the first thing that it's going to define my risk to reward. Okay? So let's say I put it here. Okay. I like wrong numbers. Let's say I put it here. So let's say that I'm going to go and what is happening here? Wait. It goes all the way down. I don't want that. Too fast. Okay. So let's say that we have, what do you want? Who is excited for 100K account? Who is excited for 100K account? No one? I know it's a little bit of delay. So let's say we have 100K account. Okay. We know that our max drawdown that the funded account allows you, it's 5%. So first thing, don't risk 5% in just one transaction, because you are not going to have any other opportunity to put any other transaction. Okay. So you have a 100K account and you max risk that they allow, it's 5K, but 5%. But you need to have also what's the maximum risk that you allow yourself per transaction. That is going to be different of what they allow. Of course, it's going to be less. Otherwise, you're going to lose the challenge. But it's going to be different. So for me, for example, I risk 0.5% of my account in a transaction, for every transaction. So if I risk 0.1% of the account, that means that for a 100K account, I'm going to risk $500. Easy. I know that. So what I do, I know that, I have it here. I'm going to risk $500. It doesn't matter if the stop loss is like this or if the stop loss is like this. I'm going to risk $500. If the stop loss is 10 points, I'm going to be risking 10 points and $500 in 10 points. If the stop loss it's 100 points, I'm going to be risking $500 in 100 points. Okay? That's something that you need to know, and that you need to know how to calculate. Oh my, sorry. So I have the $500. So what I do, it's 32 points, right? So it's $500 divided by 32 points. How much is that? I don't know. I'm really bad at math, but I don't care. I have these things that call calculator, and that's all that you need. So it's 15.62. Let's say 50. Let's round the number so we don't get messed. So 15. What that means? That I'm gonna do a 15 lot. Why? Because my contract in the asset that I trade, it's $1 per point. So I'm gonna risk 15 lots. If I do 15 lots, okay, and that's when this comes. Okay, I'm gonna put a transaction at least to here. Okay, at least to here. So I'm gonna put a 1 to 5 transaction. What that means? What that means? That means that I'm risking $500, okay? $500. That if the transaction gets into my profit, I'm gonna get 15 times what I'm risking. Sorry, 5 times what I'm risking. Okay? So how much is that? How much is that? Let's see. Oh, there is some delay in the chat. Let me put this so you know how much. 5. That's why I put the 5 here. Okay? Why? Because my transaction is 1 to 5. I'm going to show you another way to calculate that. So it's 500 times 5. 500 times 5. It's $2,500. Okay? So this is my transaction 1 to 5. Okay? Here is the importance of risk management. If I make $2,500, how much percentage is that in a 100K account? I like this to be interactive, so you have to type in the chat. $2,500. How much of the percentage of the 100 account or 100K account it is? It's 2.5%, right? So I just made 2.5%. And how much I risk? Only 0.5%. Only 0.5%. Okay? Only 0.5%. And this you can apply it to every single account. If you're having a 500K account, you apply the same thing. And how much you make? 2.5%. And how much is 2.5% of a 500K account? $12,000. $12,500. In just, let's see, in just 1, 2, 3, 4. Let's put this bigger. Let's say we enter here, right? 1, 2, 3, 4, 5. So in 25 minutes. The strategy, everything, of course, is in Driven. Or you know why I enter here and not here. Everything is clear. Right? But this is the most important thing. 2.5% is the same 2.5% in a 100K that in a 500K account. In a 100K account, you're going to do $2,500. In a 500K account, you're going to do $12,500. And this is just one transaction, one day. What's the beauty of risk management? What's the beauty of risk management? That I can do how many transactions like this, because I risk 0.5% in all my transactions. How many transactions I need to lose after I win this to be break even? If I have 2.5% winning if I win 2.5%, I need to lose 5 transactions in order to be break even, not even in a negative position. I need to lose 5 transactions in order to be break even. That's why risk management is so important. Because if I go and I try to enter in another transaction, whatever, I don't know. Let's say that if it gets to the point, I said that it's going to go up. And I try to enter in this transaction to here. And I put the stop loss. Almost the same transaction. And I enter that. I shouldn't because I already have 2.5% in the account, but this is just an example. So let's say I enter in that transaction. Let's put it faster. Doesn't want to get me out of the stop loss. Go down. So I enter in this transaction. Doesn't want to go down. My students say that I win even if I'm trying to do an example. Come on. So let's say it went down and it hit my stop loss. There you go. Finally. It went down and hit my stop loss. 33 points. How much money I risk in 33 points? No, let's put the stop loss here. 50 points. How much money I risk in 50 points? It was a transaction 124. Let's do it here. Okay. How much money I risk in 50 points? In 50 points, I risk the same amount. I risk 0.5% of the account. And in this case, it means $500. So this one was a transaction, supposed to be a transaction 124. I risk $500. So how much I lose? 0.5%. So as Jay said, in this case, I'm a 50-50 win rate. My win rate is 50-50. But it happens to be that with 2 transactions, one that I win and the second one, oh, and this transaction is supposed to be into here, but it's okay. With 2 transactions, okay, just in this fast example, with these transactions, I'm at 50-50 win rate and I'm 2% up in the account. 50-50 win rate and I'm 2% up in the account in just one day. That's the important part of risk management. Because I'm going to tell you something now. You're going to lose transactions. You're going to have losses. A lot of them. And it's okay. It's okay if you're following your plan, if you're following your risk management plan, and if you're following your rules. The 3 things that I told you at the beginning. So you're going to lose a transaction? Yes. It's going to matter? Not at all. It's not going to matter. It doesn't matter at all. Do I'm dying? I have the emotion that I'm going to cry because instead of making 2.5%, I made 2%? No, it's normal. You're going to have a next transaction and you're going to win it, and that's it. Or even if you lose it, you're still up in the account. Because if you follow your plan, if you follow and you have a proper risk management, your account is going to be growing always. Even if it's little by little, even if it's 0.5% a day. You understand that if you grow an account 0.5% a day, I don't know what I did. I stopped sharing. You understand that if you grow your account 0.5% a day and let's say that you only trade Monday to Friday, in a month, you can have 10% of your account. And sometimes people doesn't like 10% of the account because they are used to have $1,000 account, a $2,000 account, a $500 account. And I understand. When you are talking about 10% of $1,000 account, maybe you are not that happy. Maybe you're going to say, well, at 10% of $1,000 account, what I'm going to do with that? Here in the United States, you cannot even put gas for a month and with 10% of $1,000 account. You're not going to do anything. Maybe you can go to McDonald's. But when you're talking about a funded account, and when you're talking about having 10% of a 100K account or 10% of a 500K account, or you can have two accounts and go all the way, as Jay said, to 900. Think about how much is 10%. Think about how much is 10%. Those are numbers that we, as a normal humans, traders, retail traders, we are maybe not used to it. So the last thing that I'm going to say is you need to prepare yourself. You need to prepare yourself to have those numbers and be used to those numbers, because it's going to happen. It's happening now. You're going to be able to have a funded account next week if you want. But you need to prepare yourself. And you need to have proper risk management. I always put my students to do back testing with proper risk management. And they send me their pictures and everything and all the results. And they say, sometimes they say, oh my God, I only have 50% win rate. And I say, well, who cares? 50% win rate, how much your account grow. I want that percentage. I don't care what is your winning percentage. I care if you follow the risk management plan, how much your account grow. That's what I care. So think about that. I'm sure, and I'm so excited for this. There's a lot of people putting 50K, 90K. If you have a 900K account, I don't even know how to say that number. I can say it in Spanish. So if you have 900K account and you only do 10%, it's maybe more than what you make in a year in your job. It's maybe more than what you make in a year. It's for sure more than what the average American make in a year in a job. That is a lot of McDonald's. So I'm going to leave you with that. Put some flame in the chat if you like the information, if you are enjoying this bootcamp, if you are learning something. I want to see the energy in the chat because I'm so excited. I have so much energy because of this information. I have my trading, my funded accounts, and I'm so excited to get one of this. I'm gonna jump in one of these funded account just the moment that they were available in the Driven page. I'm gonna run and jump in it. And whoever wants to do it with me, more than welcome to jump in every of my classes in Driven, and we're gonna trade it together. And we're gonna do it with a proper risk management. And we're gonna have our rules, your rules, my rules, all the rules, and we're gonna do it together. And we're gonna pass the challenge, and we're gonna have the account. And I want everyone to have pictures of when they have the first withdrawal, when they probably have the diploma or saying that you are a founder trader, all that. We're gonna do it together. I'm gonna do it. I'm so excited, and I'm gonna scale it all the way to 900. Oh yes, why not? Why? Because money's not gonna be a problem. Money is not a problem in this house. And that's not me because I'm a special. No way. Not at all. I'm not special. I'm just a regular mom, wife that just decide to put the work to learn this, to be coachable, and to learn from the people that really know. And I remember the day that I met Corey. I was with Carlos, and I had the pleasure to meet Corey and Alex. And I remember that day, and we said, I was in trading already. And I said, Carlos told me, this guy really knows what he's talking about. And when I met him, I said, oh my God, I need him. I need to be next to him. Because I'm a human and I'm a normal person, and I keep learning every single day. If something I'm sure and I know for sure is that I don't know everything. I'm just, and I keep being a student, and I keep watching the academy, and I keep watching the videos. And sometimes people tell me, how many times have you watched those videos? I don't know. I don't even know it anymore. I counted the first, the 2, 3, 4, 5, 6, 7. When I get to 10, I don't count it anymore. Because I keep learning every single day. When you go to a doctor, you want the doctor to be updated. You want him to know what's happening in the medical industry. You want him to keep studying. You don't want to go to a doctor who told you, no, the last time that I studied and that I went to a course and that I talked to my colleagues wasn't, I don't know, 10 years ago, 5 years ago. So what are you going to say? Oh, no, this guy is not updated with whatever is happening. He doesn't even know about COVID. So you need to keep practicing. You need to keep around the community. You need to keep around everyone. You need to keep talking. You need to keep sharing what you think. And that's the beauty. That's why we all in Driven and the trading team, we all get together. And we talk about trading, and we talk about the charts, and we talk what it's happening, and we talk how we can help you more and more and more and more and more every single day. And what's the only way to help you more and more every single day? Get better more and more every single day, so we can help you. Why? Because I have someone who is helping me. that one day say, okay, I'm going to help you. Even though you don't speak English so well, maybe we don't understand sometimes, I'm going to help you. And that's the beauty of a community. That's the beauty of Driven. So it's only on you. You need to put the work. You need to do what you need to do, even if you don't want to. And I know most of you have heard this before. If you don't want to do something, it's probably because that's what you really need. If you don't want to write down the trading risk management plan, it's probably because that's what you really need in order to get to the next level. If you're saying now, oh my God, this girl is going to keep talking about the rules, it's probably what you need. So go ahead and put the work, do whatever you need to do to get this to the next level, because now you have the vehicle, you have Driven, you have the funded account, you have the education, you have everyone here, and you have the system, and you have all the community that is here to help you. But you need to go make the decision and put the work. So love you, everyone. I hope you had a great time. Don't forget, if you haven't seen the day one of the bootcamp, go ahead and watch it. It's here in YouTube. It's already there, so you can go ahead and watch it. And don't forget, tomorrow, 12 p.m. Eastern time, same link, same YouTube channel. We're going to keep talking about this funding program. So everyone, it's going to be ready for that funded account and changing your life. Bye-bye. Love you.